Good afternoon and welcome to the Friday podcast from Sharesify. Steve and James are here with me. How are you, fellas?
All good.
Now, as usual, quick roundup of markets. S&P new high overnight. We have had 3 straight weeks of gains. That's the best performance for US stocks since May. Part of the reason for that is the inline July CPI number we had on Wednesday. That means that odds of a Fed rate hike in September have dropped quite sharply. But there's also earnings momentum driving this market. And probably nowhere have you seen this more clearly than actually in Korea, where we talked about the Kospi in the past. We said it had fallen a long way. It dropped 39% from its high to its low on the 30th of July. Well, it's up 25% from that low in the space of a fortnight. We've gone from bear market to bull market in the space of 2 weeks, which is extraordinary.
There's a great
Um,
analogy in, I think, with current markets. The Cosby slightly aside because that's a little bit different, but I think it's kind of matching the ambient temperature outside. So we had our record hottest day yesterday, record S&P finish. One wonders, therefore, the question is, will the markets come off these high points as the weather kind of cools down? So,
well, that's
interesting question.
it's interesting you said, because I was going to say not everybody is on board. Nikolai Tangen, who is, dare I say, an old contact of ours back in the day, head of Norges Bank, world's biggest pension fund. He thinks after they had a record returning H1, he reckons it's as good as he gets. Julian Emmanuel, who's chief equity and quant strategist at Evercore and quite a well-known market commentator, he was on Bloomberg TV earlier, saying, look, we've had a 4-year bull market driven by AI. Very unusually, recently we've had Mag 7, software and semis rallying together. The S&P Pharma Index is at a new high now. So we're getting to what he calls an all-rise situation, which is the final phase of the rally. James, that one was just for you, a little bit of a blue pop reference there.
Let's
Got that
let's
one.
get off, let's get off the macro. Let's get on into the company stuff. It's been a busy old week. It's always a busy week, it seems, for the tech markets. Companies that really caught the attention. CoreWeave, we flagged that last Friday as one to watch, and certainly it was one to watch. Jumped 18% post results. We've also had very strong results from Supermicro Computer, we mentioned before, Applied Materials, and Cisco. But the difference between these four companies is marked. So, Supermicro, CoreWeave had a really strong response on the market. Cisco and Applied Materials, a pretty weak response. And the main thing is about are expectations being lifted still further, or are expectations already about where they should be? So I think investors were a little bit disappointed with Cisco, a little bit disappointed with Applied Materials, perhaps because they're kind of more conservatively run companies. But they're generating tons of cash as opposed to Supermicro, CoreWeave burning loads of cash. So we've been talking for weeks about the market turning to, what is capex, what is cash flow, how these marrying up. Well, suddenly it seems this week that completely reverse ferreted, and they're happy to chase cash burning companies, and they're discounting companies with loads and loads of cash. So interesting how capricious markets can be. James, you've been looking at some interesting stuff as well, haven't you?
Yeah, three caught my eye, Steve. So the first was a JPMorgan Claverhouse Investment Trust. A rare bout of underperformance lagged the benchmark in H1. But interestingly, the managers still see lots of opportunity in the UK market, lots of value, lots of dividend growth opportunities. And that trust is still on for its 54th increase in terms of the dividend. That's pretty amazing. Also had an interesting chat with Rank Group. This is the Grosvenor Casinos Mecca Bingo company. The CEO talked me through how they can get operating profits to at least 100 million over the medium term. And it's a lot of the market share is coming from digital. But of course, with these kind of stocks, it's that threat of increased taxes and regulation that always weighs on sentiment towards gaming groups. Yeah. And the final one was Tapestry, which we flagged last week. Massive sell-off overnight on Wall Street. The Q4 earnings actually beat, but as ever, the guidance was a bit soft in terms of the sales. So we've got a chat with Deborah Aitken of Bloomberg Intelligence on Monday. So we'll see what she made of the numbers.
That's going to be a podcast, isn't it, James?
Indeed. So watch out for that one. Yeah.
Yeah, absolutely. And you flagged Tapestry again last Friday as one to watch, and it certainly was worth watching. Ian, what have you been seeing on the markets?
A couple of things, Steve. Costain, we had Hill and Smith and Balfour Beatty early in the week, both raised guidance. And we had Costain, which didn't just raise guidance, it said it sees a step change in revenues from 2027 onwards. So these guys tend not to do the sexy data center stuff. They tend to be more your electricity, energy, your water companies, water, roads, that type of thing. And yeah, new contracts coming in. It's not a very fast growing business, but if they are seriously talking about a step change in revenue performance from 2027 onwards, the shares are cheap. So it had a nice move on the day, but I think there could be more to go in that one. And then one that you more usually look at, GB Group, which does digital identity and location provision
ID
for
verification, isn't it?
yeah, ID verification and anti-fraud and so on. Now, this is an interesting one because
This
the
is
stocks
GBG Group.
GB Group, yeah. This has dropped 25% today. And the actual statement from the company isn't that drastic. What they said is that they've seen some volume attrition at their big accounts in the US. They said, but the problem is, they said, we flagged this in the AGM statement, which was only 3 weeks ago. You go back and look at the AGM statement, there was no mention of a slight miss in the US business. What they said today was, oh yeah, we told you this 3 weeks ago, and it hasn't really improved. So now we're going to lower our full year earnings, full year sales growth forecast. But as I say, you go back and look at the AGM statement, there was no mention of it, and investors didn't like that one bit. So
Yeah,
it's
I
been
can imagine. Yeah,
absolutely
that's a
hammered
really
today.
naughty step kind of move, isn't it?
Absolutely hammered today. It's the kind of situation where, instead of mid single digit growth, it's going to 1 to 3% revenue growth. Not huge. So I would imagine if you've got some deep value guys out there and some special situations guys, we talk to them all the time, don't we? And they say, this is a good business, it's had a misstep, the stock's really been sold off. I think people will be taking a look at it. But I think at the same time, it'll take a while for the dust to settle.
This cuts to an important chase, I think, Ian, is that certain managements we know in the past really like to massage up their expectations and their numbers and the optimism around the group. But over time, they will get found out if they're being a little bit cheeky. And it does sound like GB Group have been absolutely found out. Better to be absolutely upfront and honest and take things on the chin, and you get a reputation as being honest and being presenting the real facts. Investors really don't like feeling like they've had the wool pulled out their eyes.
No, I mean, I have to say the AGM statement, they said financial performance is bang in line and identity and location were growing very nicely, etc. No mention of the US, but you've got another deep dive for us, Steve, this week.
Yeah, so we've obviously been debating about whether or not to look at Workday. Workday jumped. We think it might be the biggest jump on record, 18%. Reuters reckons it's the biggest jump since 2016. It doesn't matter. Either way, it's a long bloody time. 18%, it's enormous. And this is mainly because it's been bid for by a private equity firm, Silver Lake. But we're not going to talk about Workday. We're going to talk about Anthropic. Now, we all know Anthropic is the brains behind Claude AI, increasingly taking a big chunk away from ChatGPT and competing with Google Gemini and Copilot, etc., etc., etc. We're talking about a potential IPO as soon as next month, possibly early October. Now, valuations, last valuation was about $965 billion. Now, that's pretty big. It's looking for obviously a market value of well over $1 trillion, and some speculators are going up to $2 trillion. Now that's kind of SpaceX hubris. Now, always the thing to remember here is this is just speculation, and no matter how great the company might be, that doesn't necessarily make it a good investment. You really must look at the IPO documentation when it comes out. It's not yet been released. See what the real financials are saying, what the real valuation is today, and what you can project going forward in a reasonable sense. So really tricky to do. We'll know a lot more data as time goes by, but at the moment, I wrote about Anthropic. You can go and read it on our website. All we ask for is your email address to have that for free. I've made a comparison with the SpaceX IPO only about 3 months ago. Be really interested to see if investors have learned any lessons or not learned any lessons. But we don't also have any indication whether or not there'll be a retail offer, as there was a big retail offer with SpaceX. Anthropic, we don't know. And we certainly don't know if that'll be extended to overseas retail investors. So it might be all a little bit moot for us as UK retail investors. It might be only the secondary market after the IPO has actually happened, might be when you get a first bite of the cherry. But bear in mind, speculative, very frothy, very fast growing, but burning cash, no profits as it stands. So that's worth bearing in mind, absolutely. Now let's turn to future events next week. Ian, what's on your agenda?
Are we looking at another odd one for me, Steve? Oxford Nanopore Technologies, which was spun out of IP Group. It was backed by IP Group back when it started in the early 2000s. And there was a placing a couple of years ago at £1.20. The shares had a decent run. They went up to about £2.20. Well, they're back to £1.20-ish. They report first half numbers next week. Unfortunately, they said that sales are going to miss expectations. So that's out next Wednesday. I'll be watching to see quite what the market reaction to it is. It's IP Group has lots of interesting businesses like this. And of course, the Railway Pension Fund actually tried to bid for IP Group not so long ago. I think they only last month they sort of threw in the towel and said they weren't going to buy it. That's the one on my radar anyway. What about you?
James, you've got loads of retail stuff going on next week, haven't you? So it's a deluge of retail.
Absolutely. So here we've got JD Sports second quarter update on Thursday. So, as the old king of trainers benefited from the summer of sport. And then across the pond, well, we've actually got the US retail sales numbers out this afternoon. So I think the market's looking for about 6% increase, including fuel and autos. And that will set us up nicely for some real heavyweight numbers. So we've got Walmart, Target, TJX and Home Depot next week. So, pretty busy old time.
Yeah, and in the tech space, I mean, there's not too much going on. There's nothing going on in Europe, nothing of major concern. Not too much going on in the UK. In the US, one of the obvious ones to look at and watch will be analog devices.
Analog devices.
The name escapes me for a moment there. Analog devices. Now, this is a chip technology company. It's kind of in that AI sphere, but very kind of left field because it's really invested into the sort of communications side of things, the automotive side of things, the industrial side of things. So when we talk about automation in heavy industry, they're one of the key people that can allow that to happen. So it'd be really interesting to see away from the kind of flashy AI spectrum into the real kind of nuts and bolts of heavy industry and see what they're saying, what they're driving at. It's had a very good run. It's up about 40%, I think, this year. So our expectations now are so elevated that it's going to be almost impossible to beat. So stand by your beds.
Yeah, it's a tough one to call, isn't it? That's about it from us. But before we go, the usual reminder, do take a look at our website, our upcoming events. James mentioned the podcast on Monday with Bloomberg Intelligence's specialist luxury analyst. And in November, of course, we've got the Wealth and Retirement Show, adding new speakers and panelists all the time. So if you go onto the website, go to events and sign up with the podcast code, podcast in capital letters, you get a half price ticket to that. With that, we'll see you next week. Bye for now.
Cheerio.